Welcome to the Wealth Acceleration Podcast with your host, wealth coach Wade Reed.
Hey, what's up, Money Masters? It's Wade Reed here for another episode of the Wealth Acceleration Podcast. I hope you're doing well. I hope you're feeling really good because we're right at tax time and we're getting to the point of signing those documents and getting them off to the IRS, paying the tax bill, and kind of being done with that thought for a little while. Guys, and I know this time is a little bit difficult because not only do we have our tax bill come due for the prior year, but we also have an estimated tax payment coming due for the current year. And oh my gosh, that can have a drain on our cash position. It kind of sucks sometimes. But I want to make that a little easier on you guys. I have 5 tips for you today regarding making tax time much easier. Guys, I'm with you. I'm 43 years old. I've been in business for 15 plus years as a small business owner. I know what it's like to go through this. And guess what? It's not that hard for me anymore. It used to be, but I got good tax support and good guidance early on. And I'm really hoping that what I have to share with you today will help make it much easier for you in the coming tax year. All right, so what's the deal with tax, guys? Why is it so frustrating? Why do we hate it so much? Why do we put it off? Maybe just it's a lot. Like we're taking care of a lot of things in our businesses and it's just one more thing. We want to just pass it off to the CPA and it really doesn't work. Like I have so many stories of CPAs I've worked with who have told me that they literally get like weeks before tax deadline, a shoebox full of receipts, a garbage bag full of receipts, and just like no receipts sometimes. Okay, I guess I'll look at each one of these and try to see if we have something documented sufficiently to make some deductions, but like I can't do magic. But we want our CPA to do magic. Why? Like they can't do that. Imagine your customers coming to you and saying, "Hey, fix my problem." And you're like, "Well, I don't know what your problem is. Tell me more." "Well, I don't know what to tell you. I just don't want to have this problem anymore." And you're like, "Well, what's the problem that you're trying not to have? What have you done so far to make it not be that way?" And the CPA sometimes feels that way. I mean, I feel badly for them. They're trying to do the right thing for us, but they get crap from us. They really do. And that's not okay. Guys, we got to step it up. We got to step up our game. If we want to accelerate wealth, you have to get in the game of being organized. And being organized from a tax perspective is so crucial. And the first thing is to get your financial life in order, specifically your business financial life. Number one recommendation, number one thing I hear from all CPAs is good bookkeeping is the foundation of good tax strategy. So we have to do the work or hire somebody to do the work for the bookkeeping. And that is something we can, in fact, easily delegate. We do need to oversee it a little bit, like all aspects of our business, but we don't have to do it all. We need to become familiar enough with the language of money, the language of accounting, but we don't have to be the one to do the bookkeeping. So let's hire that out. If you're not skilled at it, don't want to do it, in fact, most of us shouldn't, we need to hire it out. Get a QuickBooks expert. Have your CPA firm do it. Get something like gusto.com, which I've used in the past. Let's get that done. Bookkeeping is so crucial because in business, if you don't have documentation, you don't have a deduction. Like you can claim the deduction, but when you get into an audit at some point and you don't have it documented, the deduction does not exist. The burden of proof is on us to verify that we actually did the transaction that was necessary and normal in the operations of our business. So we got to document it. That's why it matters, guys, is so we have documentation. And it really gives us a peace of mind knowing that we've done the work or we had a bookkeeper do the work. We've got the receipts backing it up. And so I guess part 2 to that is in terms of documentation, we need to make sure we've uploaded it somewhere. We need to have track of it. So you can take pictures of receipts. You can put them on, I know I work with American Express on my business card. I can upload receipts directly for that transaction into American Express and I've got it there. You can use a cloud storage like Google Drive or iCloud or Dropbox and have a folder for all your receipts. So what I do each year is I have a folder that says taxes, and then I have a subfolder in there that has the year. So 2024, 2025. In there, I have a folder that says receipts, and I picture and upload my receipts into that folder. So I have a digital record of them. Of course, you can get more granular than that if you want to, but at least you have a backup copy because that's what matters. Sometimes they fade, they're just like heat tape. And so if they get into the sun, it can fade and you may lose the deduction because you don't have the receipt visible. So let's just be in the habit of doing that. Another tip I want to give you guys today is to make sure we've completely separated our business life from our personal financial life. You need to have a business entity that has a separate tax ID, that has a separate bank account. And that separate bank account makes it easier for us to be honest with ourselves and say, this money is from business proceeds. We've earned money. We've contributed money to it. We've maybe lent money to it. It has its own operations, its own accountability structure. And it's easier for us to keep our own business out of that. We don't want it to be a piggy bank. We want it to be a legit business operation that has proper stewardship and proper accountability around it, and that we're not just grabbing into it all the time. Because it's not actually all our money. It's the business's money. It's needed for the operations of the business, to pay team members, to pay contractors, to pay vendors. And then, of course, we get to take an income from it because we've done either work for it as an employee, or we're the owner of it and we get to take profits because we've taken on risk to hire people to go do that work. So we need to be honest with ourselves and separate the business from the personal. And part of the reason for that is the separation of liability. If you're going to have a business entity, to try to separate and create what's called a corporate veil between your personal life and your business life, then you need to honor and respect that entity. In fact, there's often required annual meetings that need to be done and minutes that need to be recorded of what was discussed during those meetings. And so if you do get into a lawsuit, somebody sues you, or there's some issue dealing with your business, that your personal life is separate from your business and you can be protected. Those assets can be separated. This can be done in terms of like how you transact. So in my life, I've got a business American Express and I have a personal American Express. They're both Sky Miles. They both share my Sky Miles number, but I completely separate those transactions for different purposes. I have a business Visa and debit card, and I have a personal Visa and debit card because some places don't take American Express. So I have those clearly separated and delineated. Is it possible to do a business transaction on a personal card and then reimburse it from the business? Absolutely. Like there are times when I've not had my business card and I've had to do a business transaction, so I use my personal. What we want to avoid, though, is using business accounts to do personal transactions, because that starts to look inappropriate to the IRS. Now, onesie twosies here and there that are accidental, I've certainly done that. I'm sure all of you have. But when we're treating the business like a personal bank account, paying for personal things like our groceries or our mortgage with our business money directly, that's a no-no. Let's avoid that. Let's see. The other thing I was thinking about for you guys is the need for quarterly estimated taxes. And this is actually a common thing that comes up for me when people bring up taxes. Like, how do I do this, Wade? How do I like maximize my tax savings as well as how I handle my tax strategy throughout the year? And if you've got a good CPA guiding you and you're operating other than a sole proprietorship, typically an LLC or an S corporation, then you generally have to pay at least quarterly. Now, some CPAs will strategically have you take most of your salary if you're a C corporation and have that go directly to your estimated payments on a monthly basis or even bi-monthly. So the majority of your paycheck just goes to the IRS pre-paying taxes. And that helps at the end of the year so that you don't feel like you have a big tax bill because you've done it throughout the year. But at the very least, on a quarterly basis, and this is dependent upon how your prior tax year went. If you overpaid in the prior tax year, you may not have to pay in on a quarterly basis. You may be able to delay a quarter or two before you have taxes due. But the IRS wants money ahead of time because they have bills to pay as well. Go figure. Like, what if one of your vendors just delayed and delayed and delayed and never paid you for services that you provided to them? Wouldn't that suck? So like, as much as I hate the IRS and you hate the IRS, they still like think of it like a legit business. They need funds. And so they ask for it to happen on a quarterly basis. And guess what happens if we don't do that? Penalty taxes and late fees. And that can be quite substantial. I've had this occur once or twice when I've just overlooked it and forgotten. And the penalties are no fun. Sometimes they can be abated if it's like a one-time offense, but if you're doing it on a regular basis, you're not paying on a quarterly timely manner, man, that can be quite an annoyance and burden. So let's like stay on top of that stuff. You can easily find those dates by looking online, and typically your CPA will give you specific vouchers that you can print off and send in, or you can even prepay them using irs.gov website. And this I've done in the past to save the headache of forgetting. You just go plan the date that you want the money to go based on the coupon that your CPA gave you, and it's done. Like, it just goes. So quarterly estimated taxes are very important. And then how about this one? How about on a regular basis, we keep our tax documents organized, like throughout the year, not just at the end of the year, but throughout the year. Like that folder I mentioned earlier. What if just maybe, we keep a digital folder throughout the year? And I had a really good example of this from a guy I worked with for a time, who he would keep each month an envelope, a physical envelope, and all of the receipts for that month would go into that envelope. And then he would either digitally upload those or just keep them in his physical folder. So you don't have to do it all digitally, although that's awesome today that we can do that. Sometimes physical folders can be really helpful. And then here's an absolutely crucial thing. If you want to get beyond just tax preparation and you want to really get into tax strategy, that has to be done early in the year. We're talking as early as February that you start thinking about the situation for the current tax year and what you might need to be doing to prepare for the taxes that would be due. So you got to look ahead at what sort of liquidation events you might have on any investments that you have. You might look at any past bills that are coming due for the business that haven't been paid yet from prior months or years. Maybe you've got some big expenses coming up, and those are going to play into how you handle depreciation expense for the year, and whether or not you do a 179 rapid depreciation, like upfront expense type depreciation, versus having some asset go over time. It's called amortization, where we spread the value of that expense over time. So like working with them early so that we can identify deductions, minimize liabilities, and ensure proper compliance. That's super helpful. You might want to have a review with your CPA at least twice a year, sometimes even quarterly, depending on how much of a growth phase that your business is in, and develop a proactive plan that aligns with your growth goals. So make sure your CPA is really aware of the entities you've got coming up. If you've made any investments in properties, like real estate properties or syndications or oil and gas or anything like that, if you've chosen to get involved in those, and because that has a big impact on the overall tax situation. So to summarize, 5 tax tips. Let's go through them in slightly out of order from when I talked about them, but think about it like this. You got to separate your personal business finances. We need to track our deductions in real time throughout the year. We need to be on top of that through proper bookkeeping so that we're getting the documentation in that matches with the transaction that we did that's actually a tax deductible expense. Make sure our estimated quarterly payments are on time so we avoid penalties and interest costs, late fees, that we maintain organized records throughout the year so it's easy to just submit those to the CPA and get our tax return done in a timely manner, and work with your professional early. Make sure that you meet with them on a regular basis, particularly at the beginning of the year and the end of the year, so that you are clear on what you're likely to have owed and it's not a surprise to you. So I have one more kind of bonus tip I want to just run by. And I know many people who have misunderstood this. When you file an extension on your taxes, it does not mean you have an extension on payment. An extension on your tax return gives you from April 15th to as long as October 15th to file your personal tax return, but it does not give you an extension on the payment of your tax bill. If you don't pay your taxes, substantial penalties, late fees, and interest is charged. And that really sucks. Not just the quarterly stuff I talked about before, but this is your actual final tax payment for the prior tax year. It's due April 15th of each year. If it's not paid by then, big penalties start to accrue. So that's my bonus tip. Make sure that if you extend, that you make sure your payment is in on time. Otherwise, it's going to suck for you. You're not going to be living life. And you're just going to yell and scream at the IRS. Like, why did this happen to me? How come I didn't know this? Well, now you do. Okay, guys, you do. Now, it is okay to extend your business tax return from March. There's no payments due with most business entities because they're pass-through entities, but your personal taxes are due April 15th. No matter what, because everything passes through to your personal life. All right, so that'll wrap it up for this episode, guys. I hope these tips are super helpful for you to de-stress the whole IRS situation and making your tax planning more effective. Love you guys. We'll see you in the next episode.
Thanks for tuning in to the Wealth Acceleration Podcast. We hope the insights from today's episode help you streamline your finances and grow your wealth stress-free. For show notes from today's episode and more tips on creating a comprehensive wealth-building plan, visit moneymasterycoaching.com. Remember, financial freedom is attainable. Until next time, keep accelerating towards your goals. See you on the next episode.